To read a stock chart, start with the basics. A chart typically shows the stock's price and volume over time. For example, look at Apple's AAPL chart. You'll see the price on the y-axis and time on the x-axis. The chart will also show the stock's opening, high, low, and closing prices for each trading day. The first step in reading a stock chart is to identify the trend. Trends can be upward, downward, or sideways. An upward trend is bullish, indicating the stock is rising in value. A downward trend is bearish, showing a decline in value. For example, Amazon's AMZN chart shows a strong upward trend over the past year. To analyze a trend, use moving averages. A moving average is a line that shows the average price of a stock over a certain period. For example, a 50-day moving average will show the average price of the stock over the past 50 trading days. This can help smooth out minor fluctuations and give a clearer picture of the trend. Support and resistance levels are also crucial in reading stock charts. Support is a price level where the stock tends to stop falling and bounce back. Resistance is a price level where the stock tends to stop rising and pull back. For example, Johnson & Johnson's, J&J, chart shows a strong support level at $150. Volume is another important factor in reading stock charts. Volume shows the number of shares traded during a given period. High volume can indicate strong interest in the stock, while low volume may indicate a lack of interest. For example, Tesla's TSLA chart often shows high volume during earnings announcements. Technical indicators can also help in reading stock charts. Indicators such as the Relative Strength Index, RSI, and Bollinger Bands can provide insights into the stock's price movements. For example, the RSI can indicate if a stock is overbought or oversold. Candlestick patterns are also useful in reading stock charts. Candlesticks show the high, low, open, and close prices for a given period. Different patterns, such as the hammer or shooting star, can indicate potential reversals or continuations of trends. Charts can also show gaps, which are areas where the stock's price has jumped significantly. Gaps can indicate strong buying or selling pressure. For example, a gap up may indicate a strong bullish trend, while a gap down may indicate a bearish trend. Reading stock charts requires patience and practice. It's essential to understand the different components of a chart and how they interact with each other. For example, combining trend analysis with volume analysis can provide a more complete picture of the stock's price movements. Real-world examples can help illustrate the concepts. For instance, during the COVID-19 pandemic, many stocks showed a strong downward trend. However, some stocks, such as those in the healthcare sector, showed a strong upward trend. To apply the concepts learned, start by analyzing a stock's chart over different time frames. For example, look at the daily, weekly, and monthly charts to get a sense of the stock's short-term and long-term trends. It's also important to consider the broader market trends when reading stock charts. For example, if the overall market is trending upward, it may be more challenging to find stocks with strong downward trends. The concepts learned can be applied to different types of stocks, such as growth stocks, value stocks, or dividend stocks. For example, growth stocks may show strong upward trends, while value stocks may show more stable trends. In addition to stocks, the concepts can also be applied to other financial instruments, such as ETFs or mutual funds. For example, an ETF tracking the S&P 500 index will show a similar trend to the index itself. To stay up to date with the latest market trends and news, follow reputable financial news sources and websites. For example, websites like Yahoo Finance or Bloomberg provide real-time market data and news. It's also essential to set clear investment goals and risk tolerance when reading stock charts. For example, if you're a conservative investor, you may focus on stocks with stable trends and low volatility. Diversification is another crucial aspect of investing. By spreading your investments across different asset classes and sectors, you can reduce risk and increase potential returns. For example, a portfolio with a mix of stocks, bonds, and real estate can provide a more stable return. Regular portfolio rebalancing is also essential to maintain an optimal asset allocation. For example, if your portfolio has become too heavily weighted in stocks, you may need to rebalance by selling some stocks and buying bonds. Lastly, it's essential to stay disciplined and patient when reading stock charts and making investment decisions. Avoid making emotional decisions based on short-term market fluctuations, and instead focus on your long-term investment goals. In conclusion, reading stock charts requires a combination of technical analysis, fundamental analysis, and patience. By applying the concepts learned and staying disciplined, you can make more informed investment decisions and achieve your long-term financial goals.